Good afternoon, it's Inge Heydorn here from GP Boland, and let's talk a little bit about Nvidia and the Q3 results and the outlook going forward. We'll start with Q3 results. I would say slightly better than market expected, but the whispering is always a little bit higher, so in line. And also, if you look at the guidance for the next quarter at 37.5 billion, is also very much in line, and that's why you saw a quite muted reaction on the results. But let's dig a little bit deeper into Nvidia and to where are we now and where we're heading. If we start with the comments from Jensen saying that demand is much higher than supply, let's dig into that first. That really means that they can't produce the volume of Blackwells that the clients want. Who are the clients? It's the hyperscalers, 50% of sales, and then it's the server producers like Foxconn, Dell, and Lenovo, Supermicro. So those are the clients that are asking for this product. The demand is higher than the supply. So where are the bottlenecks, and how would we look at it? If we start with the front end where we produce the wafers, there was a massive bottleneck before, but that's been worked through mainly due to the fact that Apple moved from 5 nanometer to 3 nanometer, freeing up capacity for Nvidia. And that's when it took this big jump on data center sales that went from 4.3 billion to 10. And since then, they have been adding 4 billion a quarter every single quarter. And that's just adding more capacity. So the bottleneck on 5 is really gone on the front end. Then on the back end, you have the CoWoS packaging. That's still a struggle to get that. And on top of that, there's a bottleneck with HBM memory, where Hynix and Micron is ramping capacity very fast, but not fast enough. And Samsung has been struggling to get the product out. So that's short-term a little bit negative news for Nvidia, as they can't produce the volumes they want. But think about it like this also. It also means that the number two, number three supplier in the market don't get any volumes at all. They are struggling even more. If the number one is struggling, the rest is struggling even more. And that really cements the market share and the momentum for Nvidia going into 25 and 26. So what's the driver behind the growth? If you look at the hyperscalers, a lot of people have been talking about their capex being high and so on. True, but remember, 50% of that capex goes into real estate and land to build the data centers, which will be filled with equipment in 2 years. That's roughly the time of delay. So the equipment being bought today are for data centers built 2 years ago. So what can we see there if we look at it? We can see record number of data centers being built out. We can see record pricing if you want to build capacity. So it's very hard to get capacity now. And that's what you saw in the Microsoft Azure warning, that they're running out capacity. And if you look at like the rate digital reality, which is listed on the New York Stock Exchange, which really just runs like a real estate company of data centers, their order book is exploding because the hyperscalers even need to go out to buy this capacity. So demand is there. The build out is stronger than ever for the next 2, 3 years. So there's no worries about there. So the last worry, return on investment. And that's been going a wide discussion. But let's dig into it. For the hyperscalers, the returns are really high when it comes to their own services. So, for example, Meta wouldn't be even close to having this growth if they wouldn't run their ad exchange and the matching with AI. And the same thing happening with Microsoft running Copilot and so on. They are full speed ahead. Then the external services hasn't really kicked off. Everybody's testing things and coming, but it's on its way. But there are things that are starting to take off now lately. And I would tell everybody to go and look at a company called AppLovin, which is really a competitor to Meta, which really copied Meta when it comes to implementing AI into their marketing tools for commercials. And the stock is just exploding in terms of share price and in terms of profitability, implementing AI. So that's a good example where you get extremely high return. And I would also look at ServiceNow, for example, which is really benefiting from AI. So from our standpoint, we think the strength you can see in Nvidia today is going to continue in 25, in 26. There will be competitors coming, but they will be struggling to get capacity on the front end, on the back end, with memory and so on. So it is very, very tough to ramp up these type of volumes that Nvidia have. And so demand is there. They're quite safe in the midterm on the markets and the valuation. Yes, the market cap is large, but the profitability is high, which means that the price to earnings is not that high. Say around, we think around $5 earnings next year. So below 30 times earnings next year for this growing company. So we continue to be quite positive towards Nvidia. And with that said, we also got positive towards the sub-suppliers as they are sold out, which is a good sign for TSMC, ASML, Hynix, and Micron, and so on. Thank you very much.